I'd like to thank everyone for attending our expert webinar. This session's webinar series is going to be about the aligning OpenAir with accounting, and we do have a special guest today, Tim Groves from NetSuite OpenAir. So this is another installment in our ongoing Expert OpenAir User Webinar Series. We do keep these recorded and available on the Top Step website, so you're more than welcome to go back and review previous ones as well as this one. So again, I'd like to thank you for joining us today. So Tim, if you'd like to advance the slides for us. And I'd like to introduce Tim Groves. He's a VP in Professional Services at NetSuite OpenAir. And Tim, would you like to tell us a little bit about yourself for those of you who may not know your legacy?
Okay, thanks Jody, and thanks for inviting me along today. So I've been with OpenAir, now NetSuite OpenAir, since we started, so I was the original professional services consultant. So as I've said in these few bullet points, I've done an awful lot of deployments over the years and also seen the product develop in many ways. So I'm hoping to share a bit of that knowledge on one particular area of functionality with you today.
Fantastic. And again, thanks for joining us, Tim. I appreciate that.
No problem.
So if we could just review the agenda and what we're going to cover today. The way we've organized this alignment presentation is really to kind of review how billing and revenue work in the organization, and if you're using OpenAir, what you may be doing within the OpenAir system itself relating to billing and perhaps with revenue. But whenever you're dealing with a financial system and an accounting system or an operational system and an accounting system, there always seems to be some challenges with reconciliation. So we're going to kind of highlight some of the reconciliation issues that I in particularly see and see if any of those ring a chord with you, and talk about the different approaches you may find yourself trying to deal with in making that challenge less of an issue. Okay. So what we'll do then is one of the approaches we'll talk about is some particular feature functionality within OpenAir that I think is a huge feature that many people are not necessarily using or they don't know about yet. So Tim's going to talk all about the accounting dates and accounting period functionality that's available with OpenAir that can solve some of those challenges that you're dealing with today. And then we'll summarize and open it up for Q&A. So let's go into the overview slide. So here's a graphical representation of the generic project accounting process. You have setup of the project customers or the accounts. You have the project setup activity. And if you're using billing rules, you're definitely putting billing rules on the project. You may or may not be using revenue recognition in OpenAir, so you may or may not have to put rules on the projects for those. And from the billing rules, we know that you capture time and expenses. Of course, if you have any milestone billing or monthly fee type billing, those things are handled through execution of those rules, and they spit out charges or line items that you put onto an invoice, and then it goes over to your financial system, either through manual integration or some automated integrations that you may have in place. If you do have the revenue side of the system set up, then you would also run those revenue rules and generate revenue in OpenAir, which is one of those things that you want to reconcile between your accounting system and OpenAir. Okay? So if you go to the next slide. So thinking about billing and revenue as activities, the obvious distinction between the two is one is customer facing, and that's the billing activity. So you're generating the invoices, you're sending those to customers, and they're seeing that you delivered some kind of work or you've got contractual agreement with them to deliver work. So the billing activity, even though it's customer facing, think about how that customer facing data is captured and presented to the customer. As work is being delivered and those rules are run in OpenAir, it's generating charges, and the charges tend to reflect the date of when the work was delivered or when a milestone is reached. And then the invoice itself, when you send the invoice to the customer, the invoice typically has a date, and that date really is driving when does the customer have to pay that, which is different than when was the effort delivered. Okay? And there's some challenges even in those two different date sets, the work delivered date and the invoice date, that may be causing some headaches when you're trying to reconcile numbers. On the revenue side, Some of you may not be using revenue in OpenAir at all, and if that's the case, you're really tracking revenue through pseudo-invoice reports in OpenAir. You're using the invoicing data to reflect an approximation of the revenue. You're using the invoice data as revenue data. And that works fine for companies that have straight T&M or straight milestone, rev rec on milestone dates. But then it runs into some challenges, as you probably are aware of. What if you have a prepayment? So the invoice shows that you billed, $5,000, but you didn't actually earn that money yet for revenue. So if you look at the accounting system, it's not there. Okay. When you're dealing with without tracking revenue in OpenAir, you're sort of having a little bit more of a headache and more of a challenge because you're taking the invoice information and trying to reconcile it against revenue in an accounting system, and that could run into all kinds of date mismatches there. But if you are using the rules in OpenAir, the rules in OpenAir create transactional data based on the type of rule you're dealing with. So for those of you familiar with the revenue rules in OpenAir, if you use something called as billed, that just sort of looks at what you put on the invoice and says, okay, I'm just going to copy those same transactions as revenue transactions, and they get all the same dates. Okay. However, as we're going to talk about in the challenges, those dates may not match with what the accounting system thinks it's getting. Okay. When you have more of a work in progress or a percent complete revenue model, the day that you run the rules, well, that's the date of the transaction. It doesn't have any real other date to reference. And so now you're thinking, well, is it time sensitive? Do I have to run it on a certain day in order to get the correct date? And of course, throughout all of the revenue transactions in OpenAir, you can manually update those transaction dates as necessary. But typically, there isn't one transaction per project, so you run into some scalability issues there. And how do you manually update all of these dates to be more in line with what you want for accounting? So if we can go to the next slide. So the challenges. So thinking about invoices, here's 3 typical challenges I know that I see with a lot of customers that dealing with the financials and reports and reconciliation. And that is when you actually generate the invoice, you leave the date on the invoice of when it was generated. Okay, and maybe that also is your post date. But that date is the date of that document, and that's the date, as we said earlier, is driving the payment by the customer. That date has a very loose relationship to when the work was actually done. Okay, so an example, you generate an invoice on August 1st. The work contained on that invoice would be prior to August 1st. It could be July, and in many cases it is July work, but it could go all the way back to June or May, or maybe you're doing quarterly billing. So that invoice is not August data. It's an August invoice for prior work delivered to August 1st. There's also the other version, which is, okay, so the date on the invoice, August 1st, is really for July accounting. Okay, and this is a pretty common one. I see some companies handle this by saying, okay, well, all the invoices have to be out and stamped July 31st, which is a solution, but you're slave to the calendar, right? So if you're using sort of okay, we're generating it on the 1st of the next month, you can always backdate it, or you can leave it August 1st, but then you have to remember that August 1st invoices are actually July data, and you have to be consistent with those generation dates or those invoice dates to always be, the 1st or the 2nd of the next month is the prior month in order to get reports to come out with correct accounting month alignment. And then the third challenge that we see quite often is, not everyone follows the calendar, okay? And there's 2 different things I typically see with that statement. One is a month is not a month. Many people will have like a 4-4-5 calendar, which means one month is 4 weeks, another month is 4 weeks, and the last month in the quarter is 5 weeks. And if you add those 4-4-5 up 4 times, it equals the 52 weeks in a year. What that means is you're redefining what the definition of a month is, and that has custom time ranges and all kinds of reporting functionality within OpenAir written all over it. The other flip side of that is, what if you do follow the months? However, your fiscal year is not January to December. Many customers are driven by government fiscal years, and those are October to September, which their year-end is coming up very quickly now. So because of that, if you run quarterly reports or quarterly dates, those those dates are Q1 is not January through March. Q1 is October through December. So just working off of the dates of the items and then understanding how that falls in the financial periods could be a challenge. Okay. The other challenge is on the revenue side. If you're not doing revenue rules in OpenAir, the assumption of the invoiced amount is equal to the revenue amount may not always be true, and especially when you come up with those prepayment situations, and for those of you who are doing fixed fee invoicing, but your revenue policy is a WIP revenue, work in progress revenue. You earn it as you deliver it type thing. So those are two items we run into quite often that drive the need to actually track revenue separately in OpenAir to be able to easily reconcile with an accounting system. But then again, taking into consideration the invoicing dates versus the revenue dates, an August invoice may mean July revenue. So how do you make sure that when you pull a report, the invoiced amounts don't show up in August and then the revenue shows up in July, and how do you reconcile those dates together? Okay. When you're dealing with work in progress and the percent complete transactions, they tend to be, when you run the rule in OpenAir, that's the date it's going to get. And then people will actually modify that date to backdate it if they need to in order to recognize the right date for reports to work. But that, the percent complete doesn't have any other date to sort of hang on to, so it's going to stamp it with today's date, and that may not match the actual date of the accounting period. So if I ran it today, it's going to get stamped with the 18th of August, but if I'm still doing month-end close for July, August is not July. Okay? And then, of course, as those of you who are working with the deferred revenue reports or doing custom calculations to compute a deferred revenue amount, those are, of course, all dependent on the dates that you're picking and the dates that you're tracking within the system. So quite a few challenges that can come up, and a lot of them come out of date and date matching situations. So if we can go on to the next slide. So what are some approaches you can take to meet these challenges? The first one, which I've already mentioned, is turning on recognition inside your system. Okay, if you're not doing revenue in OpenAir, turning that on gives you something that can slightly differ from invoicing and be more accurate to compare to accounting. For those of you, many of you on the phone, you're already doing this, so you're saying, Jody, that's obvious. What else can I do? The next one is, some people have tried to solve this with using the date indexes on OpenAir reports. In many cases, you'll have things like give me the date that the invoice was created, or the date of the invoice, or the date of the charge, using those standard date indexes that come on the reports. And that addresses some of the challenges to some extent, but then in some cases, if you are running revenue separately, like the percent complete, you are manually adjusting those recognition dates so that the date of the transaction comes up correctly on these reports. Okay. So the third option, and this is a nice option that's joined the OpenAir family of features over the past couple of years, is a concept of adding a whole other date structure to many transactional items, and that's called accounting dates, and also understanding accounting periods within the system. And this functionality is actually really powerful, and it will help in quite a few instances in that reconciliation with your accounting system. So with that, I'm actually going to turn it over to Tim, and he's going to talk more about those particular feature functionality.
Thanks, Jody. So I'm going to structure this part of the webinar. I'm going to be showing some slides, but also flipping backwards and forwards to a demo account I have set up. So I'm going to actually show you some of the screens in OpenAir, and as much as possible within the time constraints, demonstrate how the functionality works. So as Jody mentioned, there's accounting dates and there's accounting periods, and people sort of confuse them sometimes. So first of all, I want to be clear about what they actually mean. So the accounting date, as the slide indicates, is just an extra date that's available on all the financial transactions within OpenAir, the charge, the invoice, the revenue transaction, etc. So many of the limitations that Jody outlined in the last few minutes around using the transaction date, which might be the invoice date on an invoice or the charge date, the date the work was done on a charge, can be overcome if you have another date field that you actually can put on all of those transactions and can set to be a different date from the transaction date. So that's sort of pretty obvious, but I think gives you an awful lot more power in the kind of reporting you might do. Because then within the summary reports, you can choose to use the accounting dates to drive which column, which date column values from transactions show up in, rather than the transaction date itself. The revenue that relates to July may show up in July, even if the recognition was only run in August, etc. So it gives you a lot more flexibility there. That's what the accounting dates are about. And then the accounting periods then, which again, as I said, are often slightly confused with accounting dates, are the mechanism, the primary mechanism for setting an accounting date on a transaction. So the accounting periods allow you to set up your predetermined set of accounting dates. So rather than just having a date field that people can type in any old date, you can actually set up what your periods are. July 2011, August 2011, if they're calendar months, or as Jody indicated, they may not follow the exact months, but if you name them that way, they could be financial years, they could be any particular periods you might set up, but they allow you to predefine what the actual accounting dates you care about are. And the accounting periods facilitate that automatic population of the accounting dates. I put in red here because I think it can be a confusing point, that the accounting periods are just a method for setting the accounting date. Ultimately, every transaction, everything that you actually then report on, is going to end up with an accounting date on it, not an accounting period. The accounting period is just driving which date gets on that transaction. So we'll have a look at that now, actually, by flipping over to my demo account, and just to demonstrate where the accounting dates show up. So bear with me a moment. So I have this demo account set up here, which I'm calling Consulting Services Project. So if I dig into my project here, and everyone presumably is familiar with the OpenAir project setup, so I'll dive straight to the Financial tab and take a look, for example, at some of the recognition transactions in here. You'll see if I go to the recognition transaction form, every row in here, as well as having an actual date, also has an accounting date. So when this functionality is turned on, for example, when I click into one particular transaction here, I might see that the date of this transaction was March 2009, but its accounting date was actually June 2009, because maybe the recognition, those particular hours might have been worked in March, but the recognition didn't run till June, so the person, for their accounting purposes, wants them to relate to June rather than March. So that's one example of where you would have an accounting date. Another place where the accounting date shows up is, of course, within the on the actual invoice. So let's flip across to the Invoices module and look at, so in this particular account, they're renamed Billing Summaries, which many of you may be doing. So if we look at a particular invoice within this account, we can see that as well as having an invoice date, it also has an accounting date. So in this particular example, this invoice is dated August the 1st this year, so just a couple of weeks ago, but the accounting date that's been stamped on it is July, meaning maybe that in this particular account, the customer always wanted invoices to have an accounting date of the month in which the work they contain was actually performed, rather than just the date of when the invoice was created, which, as Jody pointed out, is generally what people will put as the actual invoice date. The actual invoice date always defaults to be the date you actually create the invoice. So we've seen a couple of examples there of the particular transactions, and I've just indicated to you that extra field that basically shows up on every transaction. So let's flip back to the presentation now and go more through how that date actually gets set. So accounting dates, how might you use them? Well, in order to see those fields that I was just showing you a couple of examples of, you need to enable the accounting date functionality in your account. It's not turned on by default, but it can be easily enabled by a call to support. Usually it's set on the transactions using the accounting periods functionality. As I mentioned a few minutes ago, the accounting periods are really only there to enable you to set accounting dates. But as you saw, it's just a field on a form, so if you do need to manually update the accounting date on a particular transaction, you can do that, but usually it is set using the accounting periods. And we'll have a look at that when we look in more detail at accounting periods. The field becomes available on all the transactions, as we saw. It can often be useful to stop people changing those accounting dates inadvertently. And something I see very often is people want to put form permissions around those accounting dates to make sure that maybe if people can create new invoices or new charges or new revenue transactions, they still can't actually manually set the accounting date. You always want them set in some more automated way. Having said that, on some of the container entities, especially invoice, you may sometimes want to manually set the dates because maybe you've had to recategorize an invoice from one month to another, or with revenue transactions, you may have run revenue recognition and all the revenue got a date of July because you honestly thought it was July, but you found out later that actually the accounting people had already closed July and you were really in August and you want to recategorize some transactions. So it is possible to manually set those accounting dates, but it's also possible to use run an action on the list of transactions to actually set those dates. And actually I'll demonstrate that in the account here, going back into my revenue transactions. I myself seem to be quite often doing this with revenue transactions, which is actually going into the list of recognition transactions and saying, oh, these transactions here that I thought were going to fall in one accounting period, I now want them to fall in another accounting period, so I can change the accounting date on those transactions. So in this case, I'm going to change it to whatever the current accounting period date is, and I can change it en masse, or I could change it manually on one transaction. So we'll have a look at how I got those rules set up in a moment. Flip back to my presentation. Okay, let's move on to the next slide. So the accounting periods then are a list of standard accounting periods in use by your organization. So, and as I said, they will help you set the accounting dates when you're using the billing and revenue recognition rules. So let me flip back to the demo account and show you how the accounting periods are set up. So once you've enabled the accounting dates functionality, when you go to your administration tab, or if you're using one of the earlier versions of the GUI, when you go to where your admin or settings screen is, you will see this link here called Accounting Periods, which when I click into it, I can see in this particular account, and let me extend the list to show the whole list. In this particular account, I've set up accounting periods that start back in 2008 and then run through till the end of 2011. So the accounting periods then are just set up, and in this particular account, they're set up to match the actual calendar month. But as Jody indicated, you might have them set up to match some other calendar. Quarter 1 may mean for you a period that starts on October 1 and ends on December 31. Setting up an accounting period is very simple. You can just use the create link, and when you go in and look at an accounting period, it just has a start date and an end date and a name. And then most important, a little radio group here that lets you say, okay, when I say a transaction is assigned to this accounting period, what exact accounting date does it get? Now, often that doesn't really matter, to be quite honest, and the default is use the start date of the period. But we do have a couple of options there to enable to say, okay, when I say September 2011, do I mean the 1st of September, or do I mean the 30th of September, or do I mean some arbitrary date, presumably sometime in September? So the accounting periods then are set up usually once when the account is set up, and then periodically you would add new years to them as time goes by, and you need to accommodate new time passing and new periods.
Now, Tim, I know when I work with this functionality quite often, I like to recommend that people override the date and have it use the following date, like the 15th of the month, just to avoid beginning and end date selections that could end up during like a week that covers 2 different months. So if you're running reports saying, give me time entries for, based on the time sheet start date, and then you start pulling in data from a prior month versus a current month. So it just, I don't know if if you have had those kind of recommendations, or it really is dependent on the calendars that people are following on what would be the setting here for people to pick quite often.
Actually, I think that's an excellent suggestion, Jody, and it is one I have used with some customers. You're right. Choosing the first or the last day of a month is by definition a boundary condition, so perhaps you're setting yourself up for potential errors, that if you pick the middle of the month, you're cutting off at the pass, so to speak. So I think that's a very good idea, yes. It would just involve setting one extra field here. You would just type in September the 15th in this case, I suppose.
Great,
I'll let you do that too. Sorry, 2011-09-15. Rather curious date format I have set up in this account, isn't it? And I'm sort of confused by it myself. Okay. All right, thank you. So let's flip back to the presentation. Okay. So that's all very well and good, but having accounting periods, having accounting dates can be kind of tricky to use if you, every time you wanted to actually set it, had to decide on the name of a period you were going to use and which period you wanted, therefore, to use to derive the accounting date for a certain group of transactions, rather as I did when I did the run in action. So to get around that, we have invented this concept of what we call current period. So most organizations have the concept of what their current accounting period is, which is basically where all of the work, the transactions that are being generated at this moment are being sent. So probably now on the, 19th of August, most people are in an August accounting period if they're using monthly periods. But, the first week of August, you might have been still in the July period because you still hadn't recognized all the revenue for July or sent out all the invoices for July. Or at the very end of a month, your accounting people might say, okay, it's the last Friday of the month. From now on, we're in the next accounting period. So the concept of current accounting period is a very common one, and OpenAir supports that very well. And by doing that, you can control centrally what transaction accounting date gets stamped on transactions as they're generated. And as I mentioned at the bottom there, it is actually possible to have more than one current period. That's used perhaps not quite as commonly, but can be used in a couple of situations in organizations that are large and perhaps have different groups in different geographies that even have different accounting systems. The Germany current period may be different to the France current period because perhaps the Germans close their month on the last Friday of the month and the French wait till the first Friday of the following month. Also, sometimes you might have different periods in use between, for example, the period in which you're recognizing revenue versus the period in which you're recognizing expense. So you might not have finished your revenue recognition for the month yet, so we might still be in the previous month for revenue recognition, but expenses that are coming in should be associated with the current month. So your expense current period is different from your revenue current period. So let me flip back to the demo account and just show you some more about how these dates are controlled and where they're set, because I think that will make it clearer to you. So I'm going to flip back to my project here, go back into the projects module, and go in. This is one, Consulting Services Oxford. So before, when we were in the financials, we were looking at the recognition transactions, but now I want to show you the recognition rules, because I think those explain how the accounting date's actually being set. So here on my recognition rule, this happens to be an as-billed rule. At the bottom, we have a section that says accounting date, how to get the accounting date. So what this means is that when the revenue recognition is run, what accounting date is going to be stamped on those revenue transactions. And you'll see similar functionality on the billing rules as well. So there are several choices for getting the accounting date. Using the current value from the charge is really saying I want the accounting date to be the same as the charge date. So there may be a good reason to do that, but probably if you need accounting dates, you're not going to pick that as the value. You can choose to not have any accounting date. You can choose to type in an actual accounting date. So you can say use the accounting date specified below and then type in a date. Or you can say use the accounting period specified below and select a period. This is where the power of the current period becomes so obvious. Because I might say, well, okay, at the moment I'm in, August 2011, so my current period, I want all of the revenue to go to August 2011 as the period. But of course, that means that next month when I run RevRec, I'm going to have to go in again and change it to be September 2011 or October 2011. So for that, I would have to avoid that problem, I'm using my meta value of current period, which is allowing me to say, okay, whatever the current period happens to be at the moment when I run RevRec, that's where I want all of my revenue to go. I don't care whether those charges relate to work that was done in June, July, or August. I want all of them to go, for revenue recognition purposes, into the current period. So again, we're not losing the transaction date. Those transactions still have their transaction date on, which indicates when the work was done. But if I'm not actually doing the recognition until August, I may choose to have all of that shot with an accounting period of August. Perhaps those timesheets from June and July weren't actually entered until August. Perhaps I didn't run, perhaps they weren't approved until August. Whatever makes sense, the date on the transaction, the date the work was done, may not be the date you're actually recognizing the revenue. So let me actually run revenue recognition and billing on this project. I'll go and run billing first because I think there may be some stuff out there to bill. There we go. So on this particular example, just as I was talking about a few moments ago, it looks like we have some timesheets that date back to 2009 that have never actually been billed before. Maybe they were just approved, I'm not sure. Either way, these people, Jim, Travis, and Candice, seem to have been pretty tardy with their timesheets, or their approvers have, so they're only being billed now. In this case, though, because they're only being billed now, I mean, 2009 periods were closed a long time ago, so for accounting purposes, I would say, okay, they go in July because maybe my current period is July. So when I create the transactions, and go back and look at the project billing transactions and indeed the charges, I would see that all those charges I just created would have a different accounting period from their accounting date from their actual date. In fact, if I customized in the accounting date, that would help, wouldn't it? Beg your pardon there. Actually, this allows me to demonstrate that you can include the accounting date on your list of charges. There we go, there's the accounting date. Looking at the wrong column there. So those at the end there are the ones we just created. They have a creation date, in this case of 8/18. They were actually worked back in 2009, but they have an accounting date of July because we're saying we're still in the July period. So the current period, therefore, is extremely useful when you're actually setting which accounting date should go on a particular transaction. And in this particular case, I showed you the revenue rule before, but let's look at the billing rule this time. In this particular case, the billing rule was set to use the accounting period specified below, and I picked current period. Now, I saw a chat question come up from someone, which is a good segue into my next point, which was about using the multiple current periods that I hinted at before. In this particular account, I happen to have 4 different current periods set up. I have France current period, US, UK, and just a current period. So you can have multiple current periods set up in any one account, and then on the particular billing or revenue recognition rule, you would say which current period you want to use. So what you're trying to do here when you set up the project is you would be saying, okay, this is a US project, therefore I want its revenue to all go to the US current period. This other project is a France project, so I would want all of its revenue to go, or billing to go to the France current period. So you can choose on a rule-by-rule basis which current period you choose to use. And let's just quickly show you how those are set up. When I went back to the admin tab, So here we have accounting dates and accounting periods, but we have the current periods, which is where all the different current periods can be created. And so the one that I've rather confusingly just called current period at the moment is associated with July 11, whereas the France current period is June 2009. Now, highly unlikely France will be that far behind, but maybe France is actually still on, is down August 11, but maybe, you know, the US is still in July 2011. So you can have them set to different periods in that way. So again, this is the kind of place that the administrator or finance administrator would go in and centrally maintain which periods are actually being stamped on those transactions, are being stamped on transactions at this time. Let me flip back to the presentation. So another important way, I mean, it would be all well and good putting these accounting dates on transactions, but it would be totally useless if you weren't actually able to report on them. So the corollary to setting those accounting dates is actually to use them when you're reporting. So the summary reports can pivot off the accounting date rather than the actual transaction date. So let me show you an example of that. When we look at a summary report, and here's a tab I opened earlier. So this is just an account-wide report by project. And in the date to use for invoices here, for example, we have the billing summary accounting date as one of the options we are using. So rather like the point Jody raised earlier, the invoices may be dated in August, but if they relate to work that was done in July, because I recognize my revenue for July on the revenue that I've recognized, they contain billings for revenue I recognized in July, then I may choose to have an accounting date of July on them. So when I look at invoiced amounts, I actually want to see their accounting date, not their actual invoice date. So I could choose to do that here by saying date to use of accounting date. And then the date to use for revenue recognition transactions, I also chose to use the recognition transaction accounting date rather than the actual transaction date. And then when I run the report, it's not terribly obvious from the report results, of course, because we didn't run it with a comparison. But when I run the report, the amounts will be actually subtotaled into the appropriate columns depending on those accounting dates rather than on the transaction dates. So where I'm looking at the invoices total invoiced here, or the revenue total revenue appearing in July, those invoices I created actually had invoice dates of August, but because they related to work in July, I chose to give them an accounting date of July. Okay. And then again on the detail reports, we have a similar kind of functionality, and I've done a little screenshot here. I won't bother to demo this in the demo account because I want to keep some time for questions, but you will see when you go into detail reports, you can also choose to filter those transactions using their accounting date rather than their actual transaction date. So we're almost out of time here. So Jody, I think for the purposes of the presentation, I'll hand the baton back to you now.
Great. Thanks, Tim. So, and that was a really good detailed review of the areas. We do have a couple of questions that came in for chat, so I'll open the phone lines up here shortly. In summary of what you've seen so far, obviously if you're doing just invoicing in OpenAir and then you're trying to reconcile that against your accounting system, you may want to actually just turn on the revenue activities with OpenAir because you get a lot more flexibility in reports. Beyond that, though, with the concept of the accounting dates and the accounting periods, and even the expansion of the accounting periods to have multiple current periods, for example, you really do get more of an accounting control for the reports as Tim showed you. Now, I know with my experience, and Tim, you may have you have a broader experience based on all the customers that you've worked with. I tend to find that this accounting date, accounting period functionality is most useful on revenue transactions and invoice dates itself. As you saw from the previous slide that Tim showed you, these accounting dates are available on all kinds of transactions, receipts, project billing transactions, charges, everything. But I find that they tend to work very well for revenue transactions and invoice dates. Have you seen another object, Tim, that is usually a good target for using these accounting periods and dates?
Well, I would certainly agree with you on invoicing and revenue transactions, and certainly if I can display my own dirty laundry a little, I mean, here within NetSuite, most of the time I'm concerned with accounting dates is actually the revenue transaction accounting dates, and I'm forever looking at those and reporting on those. One area that we haven't even got time to cover in this webinar, and that was really mentioned only very briefly, but the accounting dates, of course, as Jody mentioned, do also appear on things like expense receipts and even timesheet entries, and you can control the accounting dates that are put on those cost side transactions. We've only really looked at revenue and billing. And sometimes that's useful for people, especially if they want to somehow reconcile the cost that happened in one accounting period with the revenue that corresponded to it in the same accounting period. That can otherwise be very difficult to do.
Right.
So when you're doing things like accruals and credits and goodness knows what, you might be creating all kinds of manual transactions which you want to have some date on them to indicate when you're actually doing that transaction, but you also want to indicate that this credit or this accrual or whatever corresponds to another date in accounting terms, and there you may be manually setting the accounting date on a transaction. Not to dive into yet more functionality, but of course the relatively new credit rebill function, for example, works with the accounting dates and sets the accounting dates for credits to be matching up to the accounting dates of the original invoice and all that kind of stuff. So it certainly is, accounting dates become very, very useful when you're dealing with those more complicated scenarios.
Just a reminder that we are continuing this expert webinar series. We do have the next few scheduled out for the rest of the year. We do announce them on the OpenAir user LinkedIn group as well as tweet them out as much as necessary. So please sign up for those to our webinars. We do put out weekly tips for OpenAir on Top Step tweets as well as the OpenAir users LinkedIn group. And just let us know if you have any questions or if there are certain topics that you would love to hear covered in these type of sessions, and we'll pull all the special guests we need to be able to give you guys the information that you need. So thanks again for joining, and again, thank you, Tim, so much for presenting with me. That is, I think we had covered a very good amount of data this time around.
Thanks, Jody. It's a pleasure, as always.
Thank you.